Hi, my name's Ben Herden from Mortgage Choice. If you're a first home buyer and have been struggling to get into the market, you're certainly not alone. With property prices soaring, many first home buyers have been turning to a strategy called rent vesting. Let's have a look at that and see what it means for you and why it's become so popular over the past few years. Rent vesting is when you buy a property in an affordable area to rent out while you continue to rent a home in the area you want to live, or better still, continue living with family rent-free. This allows you to get a foot on the property ladder without compromising your lifestyle. This allows you to live close to work or to the city or close to the things you love. Meanwhile, your investment property is working for you in the background. Now, you may never visit the property. You may have no intention of ever visiting the area that you buy the property in, but as long as you have done the research and the property meets your goals, which long-term is to build equity, then this is definitely worth considering. With housing affordability becoming a significant issue, especially in cities like Sydney and Melbourne, rent vesting offers some practical solutions. It allows first homeowners to get their foot on the property ladder and start building equity without the need of having to buy a property in one of these super expensive cities. Let's break down the benefits. First of all, affordability. You can invest in places where the prices are lower. Lifestyle. You can continue living wherever you want your lifestyle to be. Investment growth. There's the potential to build wealth through property appreciation. And flexibility. If you're renting, it's easier to move around for work or for lifestyle reasons if you need to. You don't have to buy and sell homes. It's essential to consider factors like rental income, property management costs, and market trends. Seeking professional opinions from people in the industry like investment property research companies, buyer's agents, mortgage brokers, accountants, and financial planners is absolute gold. After all, this is about you building wealth and building equity in a property that you may want to put towards your own owner-occupied property at some point down the track. So let's have a quick look at a real-life example of this. I had a guy call the other day and he wanted to look at both scenarios. So this could be an interesting snapshot. Now, there's 1,000 different variants that could happen here. So this was just this guy's scenario. Okay, so first of all, he wanted to look at buying his first property. So we entered his details. He had a good deposit of $50,000. He was looking to buy for $800,000, which is the maximum you can buy as a first homeowner and not get charged stamp duty. We were also looking to have the mortgage insurance waived either through a government guarantee or through a family guarantee. Now, based on his income, he'd be looking at loans of up to, say, $500,000. Depending on the lender, it could be less, say 500,000, 420,000, somewhere in there. So it's quite a big spread. That rules him out of the 800,000 purchase for his first home. Now, he's still living at home with his parents. So he said, how about we look at investing? Now, in this situation here, we've added rental income. Now, when we're doing this, the bank will want to see that the client can pay a minimum amount of board. So there is a rent or a board expense that's been added in. So I have added that in there. We've got the rental income for the property as well. This time he's looking interstate. So we've chosen Queensland and we went for a 700,000 purchase. Now, he won't get the stamp duty waived because he's not a first homeowner. He'll be renting it out. And we do need the guarantee from his parents in this case to help him avoid the mortgage insurance. So the client's still putting in $50,000, but instead of being able to borrow $500,000 now, he'd be able to borrow up to $795,000 there. So that's a big difference, and it's going to make the difference between starting to build equity now or waiting a long time until you either can buy with somebody else or build up a deposit, which is incredibly difficult to do. Rent vesting isn't for everyone, but it could be the smart move if you're looking to get into the property market without impacting your lifestyle. If you'd like to discuss this with myself or anyone here in the team, please call us on 02 9525 4544.